Do you know the difference between investment and trading? Once you get this very clear, you will be able to make money easily. Allow me to ask a few questions before we start, and you can think about the answers in your head first. Is buying Tesla stock an investment? Is buying gold an investment? Is buying a Rolex watch an investment? Is buying a house for living an investment? Well, the answers are all no. They are all considered as trading, not investment. First, we have to be very clear that investments refer to buying and holding the assets that are able to generate cash continuously for us. Cash inflow is the most important factor here to determine whether it's an investment or trading. None of the above-mentioned assets can generate cash inflow for you. Tesla stock doesn't provide dividends to shareholders. Gold doesn't generate any cash inflow for you continuously, not to mention Rolex watch. Buying a house for living is even worse. If you have a mortgage, you are basically keep paying cash to maintain this house. So as long as the asset you bought can't generate any cash inflows for you continuously, it is not an investment. I will tell you which assets are considered as suitable investments for you at the end of this video. This video focuses on the investment area first. The next video will focus on the trading side, so please don't forget to subscribe to me. When you buy a stock, or precious metals, or luxury watches, and wait for the price to go up and then sell them, that's trading. If you have a profit, you did a good trade. If you have a loss, you did a bad trade, as simple as that. But there's no such thing as good investment or bad investment, because we don't really care about the price going up or down when doing investment. Only care about how much cash inflows that asset generates. We don't sell the investment when the price goes up, because it still generates cash for you. And we don't sell the investment when the price goes down, as long as it keeps generating cash for you. We only sell it when it stops generating cash. Let me give you an example. We all know Warren Buffett. He bought a stock, namely Kraft Heinz, which is famous for producing ketchup and any other food product. He started buying Heinz for $23 billion in 2013 when it's still a private company, and merged it with Kraft Foods Company into Kraft Heinz and went IPO in 2015. Holding approximately 326 million shares, roughly 27% of the company. You can see the stock prices keep going down after the IPO in 2015. But Warren Buffett didn't sell a single share over a decade, simply because he doesn't care about whether the stock price goes up or down. This company generates over $520 million cash dividends for him every year, more than $5 billion cash generated over the past decade. He's doing investment for his whole life, not trading. Now that we go back to the 4 questions at the beginning of this video. Why is buying Tesla stock not an investment? Tesla is not paying you any dividends on a quarterly or yearly basis. It might be suitable for trading, but not for investment. Buying gold is not an investment. You can only buy and hold it for the price to go up. It's not generating any cash for you as well. Not to mention buying a Rolex watch. And buying a house for your own living is not an investment, because you have to pay for mortgage or maintenance costs. Well, of course, you may sell the house for a profit, but where are you going to live then? Now it has become trading for the house. Once you understand the difference between investment and trading, you can make your own investment strategy accordingly, because everyone's financial conditions are different. For example, if you have a decent job with a stable paycheck, I don't recommend you to do trading. It's very risky. You might lose your savings very quickly. Instead, you should focus on looking for investments to grow your wealth while keeping your current job. Eventually, you can retire early. In my last video, I demonstrated the expenses of living in Bangkok. If you have at least $70,000 for investment, With 17% return on S&P 500 last year, it can cover your expenses already. So you are basically living a retirement life doing investment. So what assets should you consider investing? It depends on your risk tolerance. If you hate losing money, you should think about buying US government bonds or other government bonds with a stable political environment. The bond generates coupons annually, which is a form of cash dividends for you. If you can tolerate the price fluctuation in an asset, you can choose to buy company stocks with strong financials and pay you high cash dividends every year. Or simply just buy the S&P 500 ETF. It also generates cash dividends as well. And lastly, you can choose to buy properties and rent them out to generate cash for you every month. I will demonstrate how to analyze a company's fundamentals to decide which company or which sectors for investments in my future videos. The next video will be the exciting one that most people are interested in, which is trading for profits. If you find this video useful, please hit the like button and subscribe to me. I will keep sharing videos about both investment and trading.